Thank you. For that, Rashi Talwar, Bhatia, partner and portfolio manager, Ashmore, is now joining in on the show. Rashi, thank you very much for joining in. So how has 2025 been for Ashmore? What were your big calls, the big winners, where you went wrong with the positions that you've held? And looking ahead to 2026, how will you position your portfolio? What changes, what themes are you looking at?
Yeah, so, 2025 is not over. December still to go. And I've been here long enough to see many such years where December can change things dramatically. So I'm just hoping for a very stable December with no major upheaval. I think in terms of, for us, it's been a decent year. I cannot complain. And I think that's part to do with the fact that early on this year, we took a view that the domestic consumption financials were going to be a beneficiary. And when I say domestic consumption, I mean more on the discretionary side, because early on in February, it was pretty clear that the government was focused on, improving liquidity and supporting growth. And if you look at February to pretty much till the last GST cut, we've seen something come in either from RBI or from the government every month or so. And I think we're starting to see the domestic consumer that had got stuck somewhere towards the end of 2024 because of the evaporation of liquidity or RBI sucking out the liquidity now coming to back into form. So I think that's kind of helped. And, it's interesting because if you look at, we're back to, say, September 24 highs, but as everybody said, the market is flat over September 24, give or take a few. But if you look at actually sectoral moves within the market, they've been pretty sharp and they've been pretty, large, so to speak. And that's the interesting part.
Indeed, it's not been a uniform kind of an up move. We've had quite a few winners in individual stocks, like an M&M has done so well, Bharti has done well, IT has dragged its feet. But according to you, for 2026, or looking ahead now, what would be the top three themes? And again, what would you be overweight sectorally? And what would you be underweight?
So I would, as of right now, continue to focus on the domestic consumption, consumer discretionary name, and some of the financial names, the larger private sector banks. I think these guys are going to be the biggest beneficiary of the liquidity influx that we're continuing to see. And it's just the starting point. We've just started to see data of literally 1 month. And I think the point people are missing is that November and December, we saw collapse in discretionary demand, autos, etc. And when we come in at a reasonable number, this, November and December, we'll start to see data tomorrow. The base is so affected that the numbers will look good. So I think from that perspective, we are positioned for that. That's how we're positioned. IT is an interesting one, and we're constantly reevaluating that because we had a reasonably large underweight for most of the year. And valuations have started to look attractive. It has corrected, and the dollar or the rupee has weakened per se, but we're still not able to find complete conviction or stories that we like over there. So therefore, we are watching it and looking at it carefully, but we haven't jumped in as yet.
So, Rashi, if you had to tell us, your top pick would be what? The private banks?
And discretionary consumption.
Both those two?
Yeah, that would be, it would be the large private sector banks. When I say discretionary consumption, I would also go with the two-wheelers, the incumbents. Mm-hmm. We've seen one do well, but one has still lagged.
Which one you like? The big boy, the Thump, the big Royal Enfield, or the one that has bigger export exposure, or the one that's more rural focused?
You can go with any. I'm telling you, from a discretionary side, all of them will benefit. The rising tide will lift all boats. You can decide which one you like based on valuations or based on the growth or based on which product profile you
But two-wheelers is something you like?
Two-wheelers is generally, yeah.
What about auto ancillaries? Some of the stocks out there, the PE has expanded quite a bit, and quite a few auto ancillaries, which I don't want to name because I don't want to be biased to any of them, but a few of them, they're looking quite good. And Street is bracing for a very good third quarter for the auto ancillary stocks itself. Are you all playing that theme?
The joker in the pack is what happens to the US. I'm not sure. And a lot of the ancillary plays have large dependencies on the Western markets, Europe and US. And I am praying for a reasonably soft landing in terms of what we're seeing. But it's the same. I cannot be bearish on IT because US budgets are not getting finalized. Even IT companies that are delivering good quarter numbers in the existing quarter do not have an outlook for the future. They themselves are not able to see it, and expect auto ancillary companies that are, in the supply chain of supplying to the companies in the same geography are going to be thriving, right?
What about consumer tech names, Rashi? A Lenskart, an urban company, Pine Labs, Grow. These are across sectors, but everyone agrees the potential is large, the earnings growth is strong. And if history is anything to go by, we've seen a Zomato and Swiggy also deliver on the leverage that comes in via scale. So where do you stand on some of these recent listings? Are they a part of your portfolio, the four that I named?
We don't generally talk about what is part of the portfolio and what is not. In general, we tend to be a little circumspect when it comes to IPOs. And that happens because we've not met the management enough, that we haven't seen quarterly numbers come out. We haven't seen, the regular set of information that we get for a lot of the other companies is not there when we're evaluating IPOs. So we tend to be a little more circumspect and stay away from IPOs for a bit. And we always meet management whenever we are offered those meetings, but are very clear that we take our time, because I like to see management 3-4 times before I can get a sense of who's optimistic, who's pessimistic, and judge even their demeanor when it comes to talking to investors. So I think the opportunities and all the names that you mentioned will come up at some point of time for us over the next few quarters.
Rashi, thank you very much for joining in. Just counting down to the close.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.